you record a cash transaction for revenues under accrual basis? Or rather, I'm sorry, under cash basis. What would you do if you had a cash sale? Debit what? Cash. Yeah, please tell me that. You mean it's exactly the same as it was accrual? Yes. Of course it is. Debit cash, credit sales. Okay, what would you do if you sold something on account under cash basis? How much cash did you get? None. What would you record? Nothing. No entry. What would you do though when they paid you? You'd debit cash, wouldn't you? So in some later month you'd debit cash, and what would you credit at that point? Sales. It's not a sale until you get paid. Got it? That's all it is. This would be much easier. You could just wait till you get paid and record the sale. What's the problem with it? This is January. This is February. What happens? Yeah, they can't tell what's going on. They can't predict the future with it. You got it. Which is better for predicting future cash flows? A cash flow statement where you show cash in and cash out, or an accrual basis income statement where you show what you really earned? I think accrual basis, don't you? That's what the author said. It's obvious, isn't it? Don't you want both these sales to be in January, seeing as they were January sales? You should have debited accounts receivable and credited sales over here. Cash basis, you would not have done that. Cash basis is you don't have revenues until you get paid. It gets worse. What would we do if we had a prepayment? What would you do here if you had a prepayment? What would you do on accrual if you had a prepayment? They paid you in advance. Debit cash and credit what again? They're paying me in advance. Unearned revenue. Absolutely. Okay, so now what? What do I do if I'm cash basis? It's crazy. What would I do? Debit cash and credit sales. I'm crediting sales before I deliver the product? Yes. If they paid me, it's a sale. You got it? Everybody get the difference here. Okay? So if you're a cash basis taxpayer, what do? Only record revenues when you receive cash. Not necessarily when you sell things. What do you do if you're accrual basis? Only record it when you sell things. Got it? How about expenses? Can you do expenses now that I did that? I bet. Bet you can. What would expenses do? Bet you debit the expense account, whatever it is. Credit cash, whatever it is. That's just like cash basis, right? Or I'm sorry, accrual basis, right? Cash transaction, it's recorded like a cash transaction. Okay? So here we got January again. Here we got February. If I incurred the expense in January and I recorded it in January, it's the same, right? I paid for it in January and I incurred it in January. You get recorded under cash basis and accrual basis exactly the same. Okay? How about though if I accrue an expense? Under accrual basis, what was it? Debit the expense and credit what? Some sort of a payable. Sure. Debit salary expense, credit salary payable. Right, guys? Debit rent expense, credit rent payable. Okay? What would you do though with your cash basis? Oh, I don't have that expense yet, do I? When do I have it? When I paid for it. I debit expense and credit cash in some future period when I actually paid for it. So of course, my expenses wouldn't be high enough, right? From an accrual basis standpoint. Got the idea? How about deferred expenses? What are those called again? Prepays. Okay, so there's a prepayment. What do we do under accrual basis? We debited prepays and credited cash, and then later when we used it up, what do we do? Debit expense and credit prepay. Right? That's what we did. Okay? What do we do here? I paid for it. Credit cash in January. I know I haven't used it up yet. I don't care. What would it be? Whatever the expense is. Everybody got the idea? Okay. Now, how are you going to... That was a yes, wasn't it? Sort of. Okay. You know what? You can vaguely understand what the hell I'm talking about. You can vaguely know what I'm doing when I do it in class, and then you can not know how to do it. Is that true? The three of you that just looked at that video, you still had to work the problem, didn't you? And after you tried to do the problem, and it didn't quite work out, partly maybe, I hope, okay? You work hard. Then you go watch the video, and it's like, oh, that looks pretty easy when Keith does it, huh? Then you tried to do it yourself, didn't you? Was it automatic, just intuitive at that point? Yes, good for you. Okay? Then you paid attention and watched the video. Because I do show you how to do it. I'm explaining to you how to do it right now. It's no big deal. This isn't a trick. This is knowing what the hell you're doing. Okay? Not a trick. Just start recording. Good. All right. Good thing I don't ever use any profanity on this. Probably against spelling rules, I suppose. You could have the president listen to all my tapes. You could find out all the horrible things I said about him over the years now. It's been several years. He didn't have time for that. So anyway, you could take little clips out of it, though, and make a nice video. That'd be fine. Okay. I don't know what I said about him over the years. I don't know what I said, so how would I know that? Okay, anyway. All right, guys. Gals, guys, computer terms, yes, cool. How do you switch cash to accrual and accrual to cash? Cash has none of the accruals and deferrals in it. Guess what you'd have to record? All the accruals and deferrals. You'd have cash basis, right? And you'd adjust those cash basis numbers to be what? Accrual. Just make the entries. Just pretend you make entries. Don't have to really make the entries. What if you had accrual basis? How would you get back to cash basis? How about reverse out all the accruals and deferrals? That's it. And all of a sudden it's real simple. Oh, do you guys remember doing the cash flow statement of principles? What a pain it was and how good you got at it, right? Got good at it. Okay. Remember that part at the top that was converting accrual basis income down to cash flow from operations? Top section? That's what we're doing here. We're converting accrual basis income to cash basis income. It's the same thing. You already know how to do it. And what this will do for you, by the way, if you can do this, I bet you can make all the deferral and accrual entries because you have to know what the deferral and accrual entries are to do this. You get the idea? So if you can do this appendix, by the way, most schools don't bother with this, which is insane because they test on it fairly heavily on the CPA exam. But it's supposed to be too hard, right? Isn't enough time, whatever. Okay? This is really good stuff because if you can do this, it's really going to help you with the whole of chapter 3, right? Which is just accruals and deferrals, basically. Okay? Accounting mostly is. So anyway, let's try this problem. Let's do it. So how would you approach it? What do you think would be a really good idea? Because I gave you accounts receivable, unearned revenue, inventory, accounts payable, prepaid expenses, accrued expenses, cash receipts from customers, cash receipts for expenses in inventory, cash disbursements for inventory, prepare a cash basis statement, and an accrual basis income statement. If you were to look at this problem on a quiz and I told you you had 10 minutes to do this, what would you think? What would you two think? Okay, thank you. Are you there? Review it before the quiz. Still do it. Would you be there? He doesn't believe it yet. How was the rest of you? Where are you? Yeah. Okay. Anyway. Well, give me an idea what to do, what to start with. You guys can do it. It's okay if you watch. That's fair to prepare. None of that's what strategy. It just takes time, doesn't it? It takes time. And it's boring. Me talking. Well, where would we start? How about write down everything you know and stuff what we've done? You ever hear that from me? Do that. And before I started that, I think I would put the stuff together that goes together. Do you guys know how to record sales? I want to do accrual basis. Oh, by the way, what's a cash basis income statement going to look like? Let's start with that, I guess. Company name, whoever they are. Income statement. Be sure and say cash basis on it, otherwise the people will assume it's accrual basis, okay? Sure and put that on there. And a date for the year ended, whatever it is, or month ended. Everybody agree? What do we do for accrual basis? Company name, income statement, accruals, right, basis. You don't have to write that down, but for this problem I probably would distinguish between the two. If it was on the CPA exam or something, make sure they knew which one I was doing. Okay, and then for a year ended. Okay, you tell me what goes on an accrual basis statement. I know you know that one. What is it? Sales. And if you have them, what do you take out? Cost of goods sold. Will we have cost of goods sold here? There's inventory sitting there, you guys. Are we going to have cost of goods sold? I don't know what you do with your inventory, but I try to sell it. Right? Of course you're going to have cost of goods sold. Okay? So you're going to have cost of goods sold is what? Gross profit. You don't have to have cost of goods sold. Right? If you're selling services, there's no cost of goods sold. Right? No, doesn't matter. Okay? And then what? Operating expenses of various kinds? Everybody agree? What does that give you? Net income before tax, and I don't think I had taxes on this problem, so it's just net income in there. Those are the numbers I'm looking for, right? I already know what I'm looking for before I start doing a problem. It makes it so much easier, right? Okay, what would we have on cash basis? Cash in and cash out, right? So what do you want to do? Revenue, but cash basis revenue. So what would that be? Cash received from customers? You can call it sales dash cash receipts from customers, or just call it cash from customers, huh? This one's real flexible. This is generally accepted accounting principles. This is whatever you want. Got it? Okay? Cash from customers. And then what? What would we have that's similar to cost of goods sold? How about cash paid for inventory? What do you bet? Cash disbursements for inventory. What do you bet you subtract that from the cash from customers and give you something like a gross profit cash basis, I guess? I don't know if there's any such thing, but we'll call it that. Okay, sound good? Something like that. Okay, and then what would you take away? How about the cash that goes out for operating expenses? How about cash disbursement for operations, operating expenses? And then what will that give me? I guess sort of a net income. It's a net increase or decrease in cash from operations, right? So call it cash basis. Are those two going to be the same numbers, the net incomes in both cases? Of course not. You have accruals and deferrals. Okay? So I know what I'm looking for. So what can I do at this point? How do you record these sales up here? I can think of 3 ways to record the sales. Can you guys think of 3 ways you might record sales? What do you want?
What's the cash after gross profit, the cash rate?
Gross profit, cash basis, cash disbursements for operations, so the operating expense, only it's the cash out for operations, and then net income, cash basis. Good? Okay. It's only in stiff language. White, slow. Terrible. Okay. Come on, that was funny. All right. So, let's do this. Let's talk about which accounts go together. How could you record sales? What's one way? We just did them. What's one way you record sales? Different times you can record sales. Cash at the same time you sold it. What's journal entry? You guys know these things. What's the other possibility? Another one.
Accounts receivable.
Accounts receivable. Debit accounts receivable and credit sales. Right? Why didn't I write journal entry in the right place? That's weird. Credit sales. Okay? So I got a debit and a credit done. I got a debit and a credit. By the way, what happens when I get the cash here? Debit, cash. Credit what? Yeah, this is easy, you guys. It's just easy. It's stuff you already know. What's the other possibility?
Unearned revenue.
Unearned revenue, which would be debit what? Should be just automatic. Credit what?
Unearned revenue.
Excellent. You don't have to answer if you don't want to out loud, you guys. Keep every answering in your head. You should have all of them. Okay? All right. What happens now when you earn the revenue?
Debit unearned revenue. Debit revenue.
Sales, I guess, in this case. Huh? All right? Got it? Those are the possibilities. Guess which accounts I'm going to work on to figure out what my sales are and what my cash receipts from customers are. How about cash? How about sales? How about accounts receivable? And how about unearned revenue? Is there anything else? Of course not. You already know that, don't you? So take a look at the accounts we have there. Which accounts go together? You think accounts receivable and unearned revenue and sales and cash receipts from customers might go together? All right. They do, don't they? It's the only way you can get sales. The only time you're going to credit sales is if you receive cash from a cash sale, or you sell an account. That's the first one. Or you sell an account, or you earn unearned revenue. So when you get your sales, those accounts go together, right? They're all tied together, and you know the interest. Okay. So let's switch over to cost of goods sold then now. What accounts go together there? What do you think? How do cost of goods sold work? You can do it this way instead of journals if you want. I bet there's still cash. I bet we have to pay for the inventory we buy. I bet there's inventory. I bet there's cost of goods sold, but you know what? I don't really pay for all the inventory I buy when I buy it. I don't debit inventory, credit cash. What do I typically do when I buy inventory? Debit inventory and credit what? Accounts payable, of course. Okay? And the accounts payable would be for your inventory, of course. So you tell me what the journal entries are in this process. You guys already know. What do I do first? I don't think I can sell anything until I do what? Buy it, have something to sell. So when I buy inventory, what do I do? Debit what? Inventory. What do I credit? Accounts payable. Then what do I do? Pay it. Okay. What do I pay it with? Cash. So it's going to be credit this one and debit this one, I'm sorry, and credit this one, right? Isn't it? Isn't it debit accounts payable, credit cash, and you pay for it? Of course it is. Okay, and then what happens when I sell something? Credit inventory, right? And debit?
Revenue.
That's what you guys do, huh? I think when I sell something, I debit either accounts receivable or cash or unearned revenue, whatever it happens to be, huh? Could be any of those, right? This could be a cash deal. This could be a credit sale. This could be delivering unearned revenue, right? Delivering against the unearned revenue. And I would credit sales, wouldn't you? I think that'd be the sales price. If it's a $100,000 sales price, do you think it cost me $100,000? Only if you want to go bankrupt fast, because you wouldn't cover any of your operating expenses, you'd have no profit. Don't do that. That's ridiculous. What if it cost $80 for what I sold? What's that entry? It's credit inventory, all right, but what's the debit?
Cost of goods sold.
Of course it's cost of goods sold. What kind of an account is cost of goods sold? Jeez. It's an expense, of course. It's the major expense of getting your sale. Why do we call it cost of goods sold? Because it's a cost of what you sold. It is the major cost. When you bought your book, how much you pay for your book? $300 or some ridiculous thing? The book cost them $230. It's ridiculous. It should all be electronic. It's crazy. Okay? Because then the book could cost almost nothing. But now they still want to get $300 from you, don't they? Stupid. They should sell it to you for $40 and get rid of those. Right? Sell a lot more books. I don't want to do that. Okay, anyway, everybody have a book. But anyway, you have electronic. So, and I take advantage of technology. So yeah, what's the major cost they have with that book? The book. Right? It's debit cost of goods sold, credit inventory. So why were you guys doing that to me? Why were you saying you were going to debit cash and credit inventory? A whole bunch of you did that, didn't you? What are you doing? Let yourself think. Let yourself think. I know you guys can do this stuff if you'll just let yourself. Okay? All right. So anyway, absolutely, it's going to be debit, credit inventory, and debit cost of goods sold. Okay? Those go together, don't they? So what I would do is I'd put in maybe an A next to accounts receivable, unearned revenue, and cash receipts from customers, and then I'd put a B next to inventory, accounts payable, and cash disbursements for inventory that I gave you, right? And then what's going to be the operating expenses in this particular problem? And every problem will look a little different, so what? What are the operating expenses we're going to work with? I want to know operating expenses, don't I, for my income statement. I bet they get paid with what? Eventually. Cash. I bet some of them I pay in advance. What do you bet? What are those? Prepaids. I bet some of them I pay later. What are those? They're accrued liabilities, accrued payables, right? Ta-da. So what typically happens? For the cash ones, what do? Debit the operating expense, salary expense. Credit cash, right guys? What about for the ones that are on account? Debit operating expense and credit what? Accrued liabilities. What about the ones where I'm using up a prepaid? Credit the prepaid and debit operating expenses. All three, aren't they? Right guys? It's true, isn't it? Okay? And then what happens? Wouldn't you think you'd have to buy some prepaids too? What would you buy them with? Cash, right? Wouldn't you think you have to pay off your payables too? What do you pay them with? Cash. Ah. The total cash out. the operating expenses, the prepaids, the accrued liabilities. Now, there's something else about this. What's the beginning balance in an operating expense, cost of goods sold or sales? What's the beginning balance in any revenue expense account? You start the year. Zero. Why? Temporary, you close the books and start over, don't you just count over again. They don't really go away, they get put in retained earnings, right? Your net incomes get added to retained earnings, your net losses come out of retained earnings. True, guys? Okay, all right. You guys have been doing this stuff, you just don't think of it this way, do you? You just think this way. You look at a business transaction, you're going to know what's going to hit the financial statements. It's really valuable, right? Write down 20 key accounts, and you can see what the merger is going to do to the financial statements. Not kidding, right? I had Dave Calvi come over here, he's now the managing partner of EY. Anyway, Dave had come and visit too, and I asked him one time, so you ever use T accounts? Do they make principal students use T accounts all the time? You ever heard that? You say that? You use T accounts? He's what? Well, yeah. Well, when was the last time you used them? What today? What were you doing? Oh, we were at lunch, and didn't you have any paper? We got a napkin. And asked the waiter for pen. We took a napkin and we wrote T accounts on the napkin and we worked out the business. And how big was the deal? Hundreds of millions. Doesn't matter. There's numbers. T accounts, right? Knowing what you're doing, okay? They're really powerful. They're useful, right? Use them. Okay, anyway, what's different then about operating expenses, cost of goods sold, and any other revenue, and then sales, any revenue expenses? What's different? You close those and start over at zero. What about all the asset accounts, liability accounts, and equity accounts? You don't close them, so what are you going to have to mess with? Maybe a beginning and ending balance, right? In cash basis, there's no such thing as an account receivable. There's no such thing as an account payable. In pure cash, there's no such thing as equipment. When you buy the equipment, you just expense it, right? Don't debit equipment or building, debit expense. You credit cash, right? Oh, when you pay for it, not necessarily when you bought it, right? Okay. So there's none of that stuff in pure cash. Right? Nobody does that, by the way. Nobody gets that extent. So we're going to use this stuff, okay? That's the model. That's it. And it's not a new model. It's what you already have. So what I want you guys to do now is do it. Let's do sales first. Write it down. Write down what you know about sales. What I want you to do is take these numbers, write down the beginning and ending balance of the account, and then figure out what you know about what must have been transactions so far, and solve for what you don't know, and that's the whole deal. What do I want to know here, you guys, when I get done? And what you could start with if you want, I don't care, what you could start with, write that upside down. What am I doing here? Come on. Where we want to be is this, right? Give you a little hint. Can you do the cash basis income statement yet? How many of you think you can do a cash basis statement right now? I kind of think you could. What could you do? What's the first thing you'd like to know? Yeah, I'm going to write it down. What is it? 480? I just gave it to you, right? By the way, could I instead give you accrual basis sales and not give you cash from customers and you figure it out? Of course. There doesn't make which way we go. Same process either way. Okay? So I'd write that down. Go ahead and do it. All right, set yourself up a statement. Go for it. I want you to give me that statement. So what else do you have? You want to cash disbursements for inventory. Do you have that? Yeah. So what do you got, 480 and 250? Doing it for you. What's gross profit cash basis? Maybe 480 less 250? How much is that? 230. What a nice guy. 480? 250? What's this one? 230? So what do you want for cash disbursements for operations? You don't want 420? Oh, I don't either. That's for all of them, isn't it? Even says expenses, inventory, everything. So what would you do? Take the 420 less what? 250. It's just reading, isn't it? How much is that?
170.
Oh. So what's your net cash flow? 60 increase. That's it. Right? That's it. So convert it into an accrual basis fund. You know the cash. You can figure out what the journal entry is for cash. Good. Write down a few key accounts. Do sales by itself. Do cost of goods sold by itself. Gross profit will be easy. It's a subtraction. Do operating expenses by itself. Net income will be easy. It's a subtraction. Got it all set up for you. This is what, 3 minutes? Okay, 6. 2 minutes each. Write down the entries you know must happen. Anybody else not have a worksheet with them? You're sitting next to someone who has one?
I mean, I've got the stuff written on the page to do.
Not speaking here, you might just sit. I said we were going to do this, and I sent it to you. Damn. Frank Raymond, you guys haven't briefed on yet? A few minutes ago, he was talking about an NBA student. He says, this is the most flexible guy. You know, he'll switch teams because we're having to mess with some teams in the NBA. He'll switch, I know he will. He's a great guy. And he says, so would you hire him? And he starts laughing. He says, are you kidding? Absolutely. Smart, works his ass off. He keeps bringing the fire. And I says, I'm not smart. I don't work hard, and I'm not flexible. And he says, well, I would hire you. Everybody has access to the problem now. Somebody or something. Go really fast. Really fast. And then problems that I'm going to give you on a quiz or a test that I'm going to teach you that are nowhere near this complicated, right? A bit of a piece of it. It's a joke. After you get to do this. Everybody still working on sales? Does anybody have sales? You know sales? Yes, yes, yes. More, maybe. Still working on it? Just do sales, we'll do that. Then you can do the next one. It's going to look like it's a trick. It's not a trick. No, it's related. Which accounts are you using? Accounts receivable, unearned revenue, sales, and cash. Right? They go together. You need debiting and credit. They always go together in every company on earth. Right? People sell things. And they collect the money. Sometimes on account. Sometimes get prepaid. Unearned revenue. Sometimes for cash. you already got the sales, go ahead and do the other ones, of course. You guys ready? Give it a shot. Okay, what's the deal going to be? What are we looking for? Sales. What will we try and analyze? Cash. What else goes with sales? Accounts receivable. And unearned revenue. Tell me what we know about each of these. Sales starts with nothing, right? Okay. Be credit, of course. Okay, and I might have a debit to cash and a credit to sales. And I might have a debit to accounts receivable and a credit to sales. And I might have a debit to unearned revenue and a credit to sales. That's true. Right? And then I might have a credit to accounts receivable, right? And a debit to cash. And I might have a credit to unearned revenue and make it different. And a debit to cash. So those are the entries, huh? Okay, but what do I know? I know sales starts with nothing. Do I know anything about cash? I know how much came in, right? I know the total of these three is how much, guys? How much? 480? 480. Let's just assume that's all sales. Doesn't matter at this point, but you could assume it's all sales if you want. Or, you know, you could say, well, it's debit cash and credit sales and credit accounts receivable and credit unearned revenue. It is, isn't it? So you can do it that way if you want. This might work. What if we debited cash for 480? Here's one way. A bunch of different ways. I'm going to credit sales for something. I don't know if the sales are more or less than the cash received, do you? Could be more, could be less, right? Because what could happen? Accounts receivable could go up or down, and unearned revenue could go up or down, right? But I know I'm going to debit cash and credit sales. So I got the cash. Well, let's take a look at receivables. What do receivables start at? How much? 54. What did it end up at? 65? Okay, and what would have happened really is I debit accounts receivable for a big number, right? And credit sales for that same number. Everybody agree with that? And then I would credit accounts receivable and debit cash for a big number too. But you know what? That number is what? The credit is 11 less than the debit. You guys agree with that? I got 11 net debit here. So what happened to accounts receivable during that period? 11 increase, right? So I sold 11 more than the cash I received. It's true, isn't it? If your receivables went up, didn't you sell 11 more than the cash you received? Yes. Okay, unearned revenue, what did it start at? What does it end up at? What happened? Looks to me like the amount we collected, we debit cash and credit unearned revenue, wouldn't we? That amount we collected is less than our debit to unearned revenue and credit cash, huh? So I have a 2 debit here, don't I? Unearned revenue goes down by 2. So what's sales? You got 480 collected, but your sales are 11 more because of the increase in receivables, and they're 2 more because of the decrease in unearned revenue. What is it? 492, is that what that is? 480 and 11 and 2?
493.
493. Oh, nice job. Okay, 493? That's not right. How many had 493? Starting to get there. Okay. Is this hard? No, it's just not. This is 493. There are all kinds of different ways to approach this. The author showed you a couple different ways, right? Make it a little different. You just treat it as a journal entry if you want. That's fine. Okay. Well, let's do cost of goods sold then. You do it. Show it. Which accounts? Cost of goods sold. Cash out. What else? Inventory. What else? You buy them on account. What is it? Accounts payable. Analyze them. Go. You've done everything you know. Stuff what we don't know. You know all these relationships. This is good stuff, isn't it, guys?
Unearned revenue is a credit. Because it's liability. Unearned revenue. So the key is there, like what the total, you know, what is the difference, right? You pay your rent and rent. So you use the building, that's paying. The liability for that. Right? How about that?
That makes sense. The liability. Right. The increase in credit reduces the debt. And all this stuff just swims around it for the next. In better shape. Oh, that's right. I can point to the time. Keep it. Everybody got a number? Gonna get real fast. Boom, boom, boom. Right? I know what I'm doing. I think I'm looking for cost of goods sold, aren't you guys? You need to know that's an expense account. Be a good idea. Inventory is what I sell. I buy the inventory on account. And then I, of course, pay for it. Okay, what do I know? What I want to know is cost of goods sold, huh? What do I know about inventory? Beginning is what? 65. Ending is?
65.
That means I bought 4 more than I sold. Right? Okay. What do I know about accounts payable? 52. Ends up at 50. That means I paid for 2 more than I borrowed. Right? I paid for 2 more than I bought in this case, because everything I bought, I borrowed. You can assume that on accounts payable. Probably not paying for inventory. I'm sorry. You can assume that accounts payable goes with inventory, right? Because you don't buy inventory except on account. But if it was for cash, it wouldn't matter. We'd still work this, right? Wouldn't make any difference. What do I know about cash? How much cash went out for inventory? How much? 250. That's part of the journal entry, isn't it? Okay? So I'm going to credit cash, 250. I'm looking for the debit to cost of goods sold, aren't I? That's what I want. Okay? I know accounts payable went down by 2. That's a debit to accounts payable. 2. And I know inventory went up by 4, right? That's a credit, isn't it? Right? So if the inventory goes up, I didn't sell some of it, huh? So that lowered my cost of goods sold. Sure did. Credit here, right? Inventory went up. You guys notice I put that backwards? Thought myself. Accounts payable went down and inventory went up. Inventory is a debit before. Okay, so what happened? I have 4 less cost of goods sold because I kept it, right? And sell it. And my accounts payable, some of the cash going out was to reduce accounts payable, so my cost of goods sold is less than the cash that went out from that standpoint too. So what's cost of goods sold, everybody? What is that? 242? Is that right? Did I do it right? 240. That's 6. Okay. 244. Sound good? Or if you want, on this one, you can say, well, what really happened? You can get a little fancier if you want. What probably happened, you guys? Let's change this to what really happened. To get there. What do you think really happened? I bet you anything that they paid off 250 of the account payable. What do you think? You think that's right? Because if you got a credit cash for 250, shouldn't the account payable debit be 250? Yeah. So this one goes with this one. Everybody see that? It's true, isn't it? Debit accounts payable, credit cash. Then what must be the credit to accounts payable to make it 2 less at the end? If 250 was the payment and it's gone down by 2, how much did you buy? 2 what? 48? Is that true? 52 plus 248 less 250 is 50? All right, that's 248, isn't it? If that's 248, that's the credit to accounts payable. What's the debit? Inventory, 248, isn't it? Huh. So I started with 65, I bought 248, and I still have 69 left. How much don't I have? 65 less, plus 248 less 69. Everybody agree with that one? What's that number? Of course. 244. Does that number sound familiar or what? We do it like that. Can't really do that with unearned revenue and receivables because you don't know what the split is. Here you probably do, huh? Good, isn't it? So what am I going to do with that 244, everybody? Cost of goods sold. What's my gross profit? What's 493 less 244? What is it? 240. Okay, good. All right. Do operating expenses. It's really quick. Exactly the same. And it wouldn't matter if I gave you just a few accounts or if I gave you totals like this, huh? If I gave you insurance expense, prepaid insurance, and insurance payable, could you tell me how much cash was paid for insurance? Yes. So do the exercises that are like this, right? All the exercises converting from cash to accrual and accrual to cash. Problems with both practice and stuff. We'd like to believe it's going to do the right thing and more profitable. Maybe. Everybody got an answer? What are we looking for? Operating expenses. What do we know? How much cash went out? What do you say it was? Was it 170? 170. Okay, thanks. That's the cash that went out. This is unbelievably easy. I get paid for this. Explaining this to people. Hard to believe.
How do we get that 170?
How do we get to 170? How much was the cash that went out in total? How much went out for inventory? 250. What's 420 less 250? 170. Got it? You got it?
Yeah.
That was real tricky, wasn't it? Yeah. Okay. When I use that on a quiz, everybody missed that part. It's hilarious. What happens to you when you're doing a quiz? You just close your brain down and panic, right? Stop it. Don't do that. What's going to happen to you when you're in a tough business meeting and the client's going after you because things are all screwed up? Everybody else is going to panic. You are going to relax and solve the problem. Right? So you want to be. So relax, solve the problems. Anyway, what else do we have? Prepaids? What do we know at the beginning?
6.
What do we know about ending? Yeah. I bet that means you bought 4 more than you used. All right, so, okay? That's what it means. What else do we have? Accrued liabilities of some kind? Yeah, accrued expenses, accrued liabilities, same thing, right? Okay, what's the beginning?
9.
What's the ending?
Yeah.
So it looks like we increased that by 2, so the expenses are more by 2, right? Everybody agree? Yeah, you know, we bought more, right? Or we paid for less than we bought. That's what it was. Bought more than we paid for. Okay, so I know cash is a credit for 170. I know prepaid is a debit for 4, right? And I know accrued liabilities is a credit for 2. Or accrued expenses, whatever you want to call them. Same thing. What's operating expenses, everybody? What are you gonna do with the 168? Plug it right into your income statement. So what's the net income? 249 less 168. How much is that? 81. Okay, tell me the difference between the 60 and the 81 and why it happened. I'll do the difference for you. It's 20. Okay? But why did it happen? Why do we have 20 more income on the income statement accrual basis than we do on cash basis? What caused it? Really easy. It's a ridiculous question I just asked you. It's too easy to believe. Okay, go down the list. What is it? I increased accounts receivable by 11, so I have more income by 11, right? So let's start with the cash basis. The cash basis is 60, take 60 and add 11. Got 11 more, don't you? Right? You have 11 more sales. Unearned revenue did what? It went down by 2. What does that mean? I've got 2 more income, right, than cash basis. So now I'm 60 plus 11 plus 2. What are we up to? Somebody keep it on their calculator? I'll never be able to do this in my head. Come on. 7.3 so far? Okay, then what? Inventory went up by 4. What does that mean? Some of the cash that went out was to buy inventory, right? So I have less expenses, don't I? Less cost of goods sold by that 4. I bought inventory instead, right? Than cash basis. So subtract 4. Where are we at now? 69. Okay, accounts payable. What did it do? It went down by 2, which means 2 of the cash that went out was not an expense. So what would that be? That would give you more too, wouldn't it? 71. Okay, 71. Okay. Prepaid expenses went up by 4, which means what? Some of the cash that went out was by prepaids. That gives you more income too, right? Because expenses less. Add 4. Are we getting there? Okay, we did something wrong. Wrong direction.
Yeah, 4, that's 4.
Was that the inventory when it went the wrong way? We're going to get 2 more on accrued expenses. Which way is that going to go? 9,000, it goes up to 11, and accrued expenses increase. We have more expenses, right? That would lower our income. So what are we now? 77. So there's 4. I must have done unearned revenue the wrong way, right? Debit credit. Unearned revenue, if unearned revenue goes down, I earned more, which gives me 2 more, not 2 less. We must come out, right? But my point is, what you could do is you could take the 60 we have, and you could add and subtract all these deferrals and accruals changes, and what do you get? 81. Cash will convert to accrual, unless we screwed that up.
Wait, I was wanting to go back to see the entry you did.
Well, maybe we screwed one of those up. Maybe I screwed up one of those. You guys didn't say anything, though.
I tried to.
Oh, did you? Oh, I'm sorry. Was it the last one?
Yeah, the
We were rushing. Okay. What did I put accounts payable the wrong side or something?
The last one we did, the operating another one. I think it was up above.
Oh, I got them out of order somehow. There it is.
Why? It's accrued-
172.4. This is 170.
It's accrued expenses, not liabilities. Are those the same thing?
Yeah.
Because
Accrued liabilities
to
increase.
make an expense go up, you debit it, right? Like,
No, it's not. It's not an expense. Accrued expenses is an accrued liability. It's just another name for it.
okay.
It's not.
They're the same
Yeah, it's
thing?
not an expense.
Okay.
Operating expense is the expense. Accrued liabilities, accrued, right? Okay, and accrued revenue is an account receivable. Accrued liability is payables of various kinds. Okay, good question. Same as accrued liability. But that is 4. That is right, isn't it? 168.
The math to it,
And, here.
yeah.
Is the accrued liability on the right side? Yeah. So we just added them up wrong somehow.
I think
I trusted you guys. You're supposed to use the calculator.
I was just,
how do we get the sales for that 493? I'm still not sure.
How did we get the sales?
I'm still not sure if the right answer.
Okay.
The 493 we got.
So how did we get our sales? So this is all of them in there. There we go. Okay, how do we get the 493 sales? Look what happened. So 493 makes the journal entry balance, right? Look what happened. I have cash of 480 came in, right? I increased my receivable by 11. So that would mean I have more sales by 11, right, than my cash that came in. And I reduced my unearned revenue. Well, when I do reduce the unearned revenue, that's debit unearned revenue and credit sales, isn't it? So 480 plus 11 plus 2 is 493? Got it? That's it. This is easy, isn't it? Yeah. Yes, it is. There are some really cool problems. Get out of here. I know you want to stay here. I'm an old man. I'm going to run. Be sure. Now do the other ones too. Don't be a crazy person. Do the other ones. Oh, what we're going to do next time is we're going to do. How many days do you have in this chapter? Oh my, yeah. So next time we'll do reversing entries. We'll answer we'll work anything you want to do on this stuff, right? And then we'll just do any problems you want from chapter 3. So any you are trying to do and you can't do them, bring them in, right? How do I do this stuff? And then in the review session, we got a couple hours of review session next Wednesday, is it? And then the quiz is
the Monday following.
Following Monday or something, whatever it is. When we do the review session, if you haven't had this stuff for a while, or this stuff seems kind of old to you, show up and we'll just work on it. We'll just work them and work them and work them. We'll have a couple of hours. Know how, but be sure to take a look at it. Know how to do everything. There's reversing entries on exercise 320. There's cash and accrual basis on 318 and 319, so I'm over on page 141. Be sure you do those, you guys. Be sure you look at those. And then when you go back into the problems, those will be easier than what I just did.
What pages were those on?
What did I say, 140, 141 was it? Yeah, 318, 319, 320. And then over on page 149, there's a cash to accrual. Problem 311 is a really good one. And I think somewhere there's a reversing entry over in there too. Reversing entry problem. Once you understand how to do reversing entries, it's like this. Common sense, right? All of it's common sense. See you guys. Work, 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 work. I have total confidence in you. I'm telling you.